And we're joined here today with Greg Johnson, CEO of Metallic Minerals. My good man, you are not someone our group has not seen before. You've been on here a few times now. Welcome back.
That's good to be back here in your nice studio. Thank you.
Yeah, a different set. We got to keep everything changing all the time. We got to keep different images coming at people.
Yeah.
But we're also, it's PDAC right now. You've been down here for a few days. How's the event been going?
Yeah, so PDAC is the largest mining event in the world. I think there's something like 35,000 people here attending, probably 1,000 companies. So yeah, a good vibe. I think people are optimistic that the sector is starting to turn the corner. It's been 8 long years of a bear market, which is challenging.
Yeah.
But yeah, we've had a very busy schedule of meetings and getting a lot of attention in the Metallic group of companies, and it's been a really good event for us.
Awesome. And specifically to Metallic Minerals, what have you been up to these last few months? You've had some news releases out in the last little while. What are you excited about, and what's happened since the last time we spoke?
Yeah, so Metallic Minerals is a silver-focused company in the Yukon territory. We're in the high-grade Keno Hill Silver District next to Alexco Resources, who's going back into production starting in the second half of this year, they said in their presentation. So it's a district that has seen this long history of production, so it's elephant country for finding more deposits. And we've been there for now. This is our 3rd year, so we've had 2 field seasons, and our process has been one of compiling all the historic information that we could get, these extensions of the known mineralized trends that come onto our ground truthing those, getting our geologists out on the ground and mapping and doing all the layers to really get the full suite of information that we can put together. We did some initial drilling, which confirmed that we had high-grade, spectacular-grade drill results on a couple of targets, which was a great kind of proof of concept program. And we've been building on that since, with last year's program starting to fill in some of the areas we didn't have as much information, advancing targets. So we've now gone from acquisition mode over the first year, where we basically acquired and aggregated the district. It was very patchwork land ownership in the Keno district because it's had this long history. We took 40 owners and compressed those into 166 square kilometer land position that Metallic Minerals controls, which directly adjoins Alexco. And so now we've been undertaking this exploration program to really start to say, okay, we've got 100 million ounces that have been defined in the last couple of years, new discoveries. The geology doesn't stop at the land border, so how can we find the next series of deposits in the district? We've been making very good progress towards that.
Yeah, and for all those who were wondering about the elephant country, we actually had a really long Facebook Live going over that. So I just always like to remind anyone who's watching this right now, if you go to FTMIG.com, there's a feature page that you can see for Metallic Minerals. We have all of your news releases are all aggregated there, but also several different videos of going over. We did one actually where what to look for in a mining company, not specific to yours, just in general. You know, what are the things you should be looking for, and then also going over, the 3 companies that are together, what your vision is for the company and all of that. So for anybody who's wanting to go back to that information, you can always go there because there's lots of great footage there for you to watch and listen to.
Yeah, I think those are a lot of the themes that we kind of hit there are, if you're looking at the mining sector, particularly exploration stage companies like Metallic Minerals and others, what kinds of things can you be looking for, and understanding the stages is pretty important to understand. Is this an explorer? Is this a developer? Is this a producer? And what should you be looking for? So I think we covered some good information on those early interviews in that way.
Absolutely, and we're going to go to a slide in your investor presentation really quickly here, but there's also about 10 to 12 very, very detailed maps where I'm looking at them, and a few of them I'm like, oh, this is great to see. A few of them what am I looking at? Yeah. And so we're going to go over that actually in a subsequent interview of diving into those. So for anybody who wants to know a little bit more and go through it, but especially for those who don't really know what they're looking at, we're going to do that in another interview very shortly here. But there is a slide coming up that we wanted to focus on specifically about, I believe it's commodities versus equities.
Correct. Yeah. So I think this is in one of our recent presentation decks, and it's a group out of Europe called Incrementum. And these guys do some really nice fundamental work. They've got a website that people can cruise over to and take a look at. But this is one of their charts that I think really tells the story of commodities, the cycles that commodities go through, and how these are relative to the general equities market. So if you look at the Dow Jones or the S&P 500 or the TSX, and how at different times those cycles can be kind of opposite of one another. So what this chart is showing you is from 1970 to present. So you've got several decades of information, this relative cycle of valuation. And so this is what's called the Goldman Sachs Commodities Index. So it's a broad basket index of commodities. So it would have metals, it would have probably oil and gas, and then you're dividing it by the S&P 500. So you're taking the whole largest 500 companies in the U.S. market and dividing it into that. And so what you can see is that when commodity values are high and equity values are low, you're going to have a peak in this chart. And when commodity values are low and equity values are high, as is the case currently, you can have a low. And so you can see these broad decade scale cycles. So the great financial crisis was the last peak in commodities. And then we saw a bull market since 2008 in general market equities. So in this chart, it now positions us at one of the lowest relative valuations for commodities versus the general market. In other words, the general market is at a peak on this relative valuation, and commodities are at the maximum trough. And so what it tells us, it doesn't tell us when this is going to change, but the concept of reversion to the mean is that these things go through cycles, that there's an average cycle that's kind of a benchmark for maybe you'd say fair value or average value, and that when you're at extreme lows or extreme highs, it really gives you a good indication. Should I be buying this sector or should I be selling this sector? No,
exactly. And it looks like since 1970, it might be just paired with 1970, but I believe it's actually just below 1970. It hasn't had such a disparity, such a trough, such a low compared to equities since the 70s.
Yeah.
And that, for myself personally, that's one of the reasons why I started looking into mining companies as an investment opposed to a trade, because of signs like this. This is proven facts over time. And I like the way that you said it as well, is that it's not going to change tomorrow.
Yeah.
We're not going to go on a bull run next week, per se. We could. You don't never know. But what it is saying is that it hasn't been this low in a very, very, very long time. And the last real big peak that we had was back in the financial crisis. So
that's right.
It does pose, it gives a really interesting question is this a time to start accumulating? And I'm speaking to people at PDAC and speaking to people who've been investing in mining for a long time, I think you're seeing a lot of smart money there. Not so many retail investors, but more so smart money, which I personally like for myself because I want to get into something earlier. I don't mind waiting if I can start seeing some of the things line up that show that there's probably a reversal that has a higher potential of a reversal, I should say, than say if I was investing in 2008 or 9 when it was at its peak. It's a much different story.
Yeah. So I think your points are really good, that these are long term, but the opportunity to buy and see something appreciate over time, you want to look for these. And these signals don't happen very often. These cycles, these are something that come along once a decade. And so to be at this point in the commodities cycle where you can be buying things at these kind of depressed values, knowing that ultimately we're going to see it go through the mean and then eventually get to an overvalued position, is a great opportunity for investors. So starting to look at good quality names, doing your due diligence, understanding the management and the potential, knowing that you're kind of buying straw hats in winter, so to speak, knowing that at some point those commodities are going to rise again as we go into the next economic cycle. And we're going to see, some of these things be able to return significant multiples on their current levels down the road.
Yeah, and now turning to make it more specific on metallic minerals, silver being one of your major focuses, if not the major focus. I remember last time we were speaking as well, there was another ratio we were going by, and that was the silver to gold ratio.
That's right.
And the prices. And I don't believe that's really closed that much since we last spoke, but for people who weren't aware of that, can you explain that ratio?
Yeah, so a lot of people who follow gold and silver closely will take a look at the relative value between the gold price and the silver price as an indication of kind of interest in the sector. With gold, it's almost entirely investment driven in terms of the valuations. It's a long-term store of value, but the relative ups and downs are driven by investor appetite largely. And so it is a barometer of investor interest. When we look at silver, half of silver consumption is industrial. So the other half is kind of the investment. And so what we tend to see is they move together. So they tend to, all the precious metals, gold, silver, platinum, palladium, they tend to move together in a direction. Gold is the biggest market by far. Yeah. Silver tends to follow the direction of gold. But as investor interest and demand starts to pick up, that incremental demand in the silver price suddenly, because all the silver that's produced every year gets largely consumed industrially, there isn't as much silver available. And so we start to see the silver price rise faster than the gold price. So looking again at the cycle like this, during these troughs, we tend to see silver underperform gold. But as we start to move up this next leg of this longer term commodity cycle, at some point we'll see the silver and gold, silver outperforming gold. And one way to measure that is the silver to gold ratio. So if we take the gold price, so roughly $1,250 an ounce, $1,200, $1,300 an ounce, yep, and divide that by the silver price, which is roughly $15 an ounce, today you get a ratio of about 80 plus. And there are very few times, just like this chart, that you see it at that high of a ratio. And on the low end, when silver is very expensive relative to gold, it can be as low as 40, 50, 30 even, and at some points even as low as 15 to 1. So it can have these big swings in value, and a lot of investors look to it. When they start to see the gold-silver ratio in the 80s, that is one of these periods that says, okay, we're at a trough again for valuations. That means silver is very cheap relative to gold, and that's an indicator that a lot will follow very closely. So people are watching right now. Are we going to see that ratio drop below 80 again and start to head towards its mean, which is probably closer to 50? And if so, that's an indication that we may be at the beginnings of a more vigorous bull market. A lot of people think right now we're in the kind of bottoming phase of this cycle, which is good. It means it's an opportunity to be picking up good quality names while they're cheap, and before it starts to move into a more enthusiastic phase of the market.
Yeah, and you never want to, it's hard to start chasing rockets. We say it all the time in our chat rooms, be very mindful if something's gone up 50, 60, 80, 100% in a day or course of a week. You really want to be able to find companies beforehand. And again, one of the reasons why I really like looking into mining companies at this moment is because I'm seeing more graphs like this, and unlike other sectors, it's very cyclical.
Yep.
And there's a lot of data that you can turn back to and find out, okay, what is normal?
Yeah.
And if you know something is well off normal, either way, if it was the exact opposite, I think I'd be more cautious right now. If we were well above the normal and we were wondering, okay, are we at a top? But it's just really nice to see to know these different things, because that allows you to then go, okay, what companies am I going to go into? Which ones do I think have that value? But you have to, in my opinion, go into it in a way of, this is an investment. This might not change next week. It might not change this month. But when it does, which history tells us it does every time, it just depends on when, you have to start looking into which horses you're going to be in. So this is the pitch for you at this point. For when it comes to metallic minerals, what are you excited about for the year of 2019? And as an investor, what can investors be looking out for throughout this year?
Yeah, so maybe just before I touch on the metallic points, just to make a couple of comments about where I think we are relative to, say, metallic minerals and others in the market. So if we look back, as you mentioned, there's almost all this history you can look at on some of these charts. You can look back at these companies, and many of them have been compressed since the peak in the commodity cycle in 2011, 95, 98%. So that kind of bear market compression as we've gone through this low. At the bottoms, we tend to see volumes starting to pick up, maybe not the price quite yet. And then over a period of time, as people are accumulating, we start to see these stocks get more active. And eventually we start to see the prices break out. And I think that's been where we've been the last couple of years. And investors can kind of anticipate this next cycle. If it's a typical cycle, we could see those same companies do the reverse of that 10-to-1 compression. If they've got good assets, a good team, and they're active and out there exploring, and with a little bit of success at the drill hole, we could really see these things start to move. So what are those things that in metallic minerals you could start to expect? Well, as we've been building our land package and our database and our three-dimensional modeling that we've been doing on the property, it's been during this bottoming period. So it's been, not only has this commodity cycle been bottoming, but we've been doing that groundwork early stage analysis to be able to get prepared. So coming into this year and in subsequent years, we now have this huge data set that allows us to be able to look at the areas and prioritize to say, here's an area that we think has promise. It's drill ready now to go in and start to drill holes, try to put together the mineralization distribution and understand where to go next. And it's a process. Yeah. It's something that if people are looking at mining companies, they need to realize typically it takes 2 or 3, 4 years of exploration before you really have a good sense of what you've got. And if you can get involved in at this particular part of the cycle, and while companies are still before they've drilled all their spectacular holes, that's really the best value in terms of setting yourself up for future gains.
Sure, and I appreciate that. And you've always been very, very open with that as well, with our community about, it's a process. You've got, like you said, you have to go through the very beginnings of a company. You start doing your mapping, you start planning it out, then you do your first couple of drills, you see what's coming out there. Was I right with all my mapping? And you keep progressing from that. But it's been interesting to follow. You're also one of 3 different companies in the metallic group. And you are the oldest one, actually.
So Metallic Minerals was started in 2016. First, yeah. So this will be our 3rd year as a company. So you're going to see the same kind of pattern in Group 10 Metals, which we started last year, which is platinum focused in Montana, and then the latest one that just started trading in January, our Granite Creek Copper company. So we've got the benefit of having that time to develop our database, do those acquisitions, develop our database, and this will be our 3rd field season. So we're pretty excited about being able to test some of those targets in metallic. Coming into this year at Group 10. Last year we were on the ground doing the ground truthing, following up on all the data that we had on the ground during the field, so mapping and additional geophysics and other work. This year we're hoping to be able to drill test and kind of proof of concept on some of those. And then Granite Creek is in that earliest stage, part of getting the data set together, 3-dimensionalizing this historic data so that you can start to visualize it in 3D and understand what the targets are and laying those out. So this year, this will be the ground truthing part, and on Granite Creek, hopefully, maybe even by the end of the year, we could be drilling on that one, which would be a pretty exciting.
Awesome to hear. Yeah. Well, for all of our viewers, and thank you very much for taking your time. PDAC is a crazy few days. So thank you for coming in and speaking to some of your current shareholders and possibly some potential new shareholders. If you're looking for more information, you can always go to FTMIG.com. We have a feature page for you. All the news releases, videos are there, and your website as well, just so I don't get it wrong.
Yeah, metallic-minerals.com.
Perfect. Thank you very much. Always a pleasure, my good man, and I'm sure we'll have you in here very soon to go over your presentation and all those charts and letting investors know what exactly they mean.
Thanks a lot. Glad to be here.